Mr. Khullar, welcome to the BS Banking Show. Good to have you on our show.
Yeah, no, hi Raghu.
Yeah. My first question is that, unlike any other bank, Citibank has been a pioneer in retail banking. Now, for you to say, and that too for a bank which has been around for nearly 100 plus years, that you're exiting retail was a big surprise to the market. Can you just take us to the strategic thinking behind this decision?
So Raghu, I think this is something which has been covered earlier as well, but I think as you know, Jane Fraser, who was a new CEO and took charge around a year back, she did a full review, of the strategy in a cold, kind of a fresh start. And one of the decisions made, which I must say in India emotionally is a difficult decision because as you said, we kind of pioneered and innovated a lot of what modern consumer banking and retail banking came to be in India. So it was clearly emotionally a very difficult decision. But the strategic thinking was the following, that as a global bank, I think our globality and our expertise and value to our clients plays best to the institutions which value globality. And these are typically corporations as well as investors. Consumer business over the years has become largely dominated by local domestic players, not only in India, but globally. If you see around various markets, at best you'll have some regional players. So it was a question of where do we deploy your limited capital. Everybody's capital is limited, and you want to try and be in businesses which you believe have a long-term, sustainable, competitive advantage. And for us, the institutional businesses are the ones because of the globality element, which I told you. So I think it was not a decision specific to India, as you know. This is something which we have done in 14 markets, including India. So this was not India specific. It was a strategic decision. Of course, what we are keeping is our focus around the US market, as well as a wealth management around the hubs, the global hubs around the world.
Am I to take from this, think global and act global is not a workable model anymore for foreign banks?
Yeah, so I don't want to comment on other foreign banks, Raghu, but what I'm saying is, I think in the institutional business, when you bank with companies, financial institutions, investors, I think globality plays wonderfully well. And I'll actually get into it when we talk about our strategy, right, which we're going to do. What I was saying is in the consumer banking, it's increasingly becoming in a field dominated by domestic banks, not only in India, but globally. Now, if you look at our institutional businesses, which by the way was, the majority of our sales and in fact, even a higher percentage of our profitability and margins, there the globality works beautifully. And I think what I'm excited about is it fits in very neatly with the Indian government strategy and the Indian growth potential. And what I mean by that is the following. India, for its growth aspirations, needs foreign capital because our domestic savings are not enough. We need foreign capital. The foreign capital can come in two ways. Either it comes in as foreign direct investment, which is companies coming in investing in India. And I think the government has been hugely focused on it through the various production-linked incentive schemes. And if you look at that segment, which is the multinational segment in India, we have around a 30% market share. We are by far the largest player in that market. And in fact, not only are we large, I think we see tremendous growth opportunity because of supply chain diversification, China plus one strategy, jointly with the government focus, right? The second element is the foreign institutional flows or the foreign portfolio institutional investors, right? Whether it's real money accounts, sovereign wealth funds, infrastructure funds, all kind of investors, right? Again, if you look at that segment, Citi has a dominant share, whether you look at custody businesses where we are 26, 27% of the market business. If you look at a corporate FX business or equity platform. So globality actually plays very, very well in the institutional business. Similarly, a lot of Indian companies are looking at growth not only in India, but globally. So we take foreign companies into India and we take Indian companies through our network, both using a global network.
Now, in your new avatar, you're basically competing with three banks which answer to your new profile, which is Bank of America, Deutsche Bank, and JP Morgan, and the whole two full services universal banks, which is HSBC and Standard Chartered, they're corporate banks. Now, what will be the differentiator when in your institutional and wholesale business compared to those banks? Beyond the point, does this business not get commoditized in any way? Because they too can claim to the same platforms and integration global chains which you just told us about.
So I think, to my mind, Raghu, the difference is the scale and size of our operation. We have been, as you know, the largest foreign bank in the country with significant market share. So I told you already about having a 30% market share in the multinational segment. I talked about having a 27% share in the custody business. We handle around 8% of India's trade volumes through our trade platform, exports and imports. We handle 5 to 6% of India's domestic online payments. If you look at it for, you could say for a foreign bank, I mean, it's kind of punching above our weight. So I think in terms of, I would say, if you look at the breadth of our banking platform, I still believe across our markets platform, our transaction services, which is cash management and trade finance, as well as our client segments, which goes from multinationals, large Indian companies, financial institutions, as well as our commercial bank, which looks at startups, digital names, as well as MSME, more middle and higher. I think we have, in size and scale, I would argue probably the broadest, deepest, biggest platform. And plus, the whole logic of that strategic shift, which I talked about, which was exit consumer banking in certain markets, is to double down our effort on our institutional businesses. So you'll actually see us investing even more. We've just added 100 bankers to our commercial banking business, where we have, high ambitions. We are hiring 5,000 people every year for our global service centers, which serve Citi's operations globally in things like technology, analytics, risk, finance, operations. So India is a place where you're going to see a lot more investment coming from us and focus.
What you just said, to the extent that the retail liabilities is off the table, how do you fund your asset side now?
Yeah. So actually, we are very well funded because, for transaction services business, which is a cash management business, we are actually a very, very large player in that. And that is increasingly becoming a technology business where you need to embed yourself, both on the collections and payment side in the client systems, through LinkedIn APIs. And our institutional business is more than well funded from the institutional deposits which we get as a part of a cash management business, right? Which is sticky business, because it's not just, you're not just pricing who's going to get the highest return on the deposit. You're actually adding value to customers by giving them the best solutions for their cash management, working capital management, supply chain management. So that's not a concern at all, Raghu.
How do you view India and your businesses linked to it, like institutional and investment banking right now?
See, we are very optimistic because one, I think the India corporate sector today, and I would argue even the banking sector, is actually in a very good space. The amount of deleveraging, the capital injection, the balance sheets are healthier. I think we do expect that the private sector capital expenditure cycle is going to follow. I think we already see a number of our customers now, and you see it, right? And there are a number of fields, whether it's on the EV side, whether it's on new energy side, whether it's on some of the core infrastructure side. You've started seeing investments pick up from the domestic private sector names as well. I think we're also very excited about the whole digital tech startup universe in India, because that's a core competence for India, and that's coming along really well, I would say. And then, of course, you said India incorporated, and if I was to define it broadly, given what's happening with the geopolitics around the world, right? Apart from the absolute proposition and all the positives of India, I think from a relative sense, I would say India really is one of the beacons of stability, right? I mean, if you see China, very complicated right now, Europe getting very complicated because of the cost of energy, redeployment to some extent, the military spend, the reconstruction cost for Ukraine, a lot of other emerging markets also very volatile, whether you take Turkey or others. So I think India I really think we have a great opportunity. And, it's great because the government, I think, has been very seized of the opportunity. And I think they've been doing the reform over the last few years, plus all the focus they have. I think India is going to be a good hub for attracting foreign investment as well, the theme which I talked about earlier.
How does a legacy bank like yours deal with fintechs and their promoters? Because they have a different cultural background completely. In fact, they may be disrupting the very same businesses you're financing at some level. So how do you balance this out?
Yeah, so two things, Raghu. One is I think we don't necessarily see fintech as either or. We actually actively collaborate with fintech, and a number of our product services has elements where we use fintechs to collaborate. But the other point, fintechs as our client, but I would say even wider. I don't want to define it only for fintech. I want to define it for a broader tech universe. And tech has been a very broad-based disruption, right? It's not only in fintech. It is agri-tech, consumer tech, health tech, auto tech. It's happening everywhere. And I think we were, I would say, fairly early on in identifying this opportunity. So we have actually, through our commercial bank, been building relationships with a number of these companies, which are today household names, 7, 8, 9 years back, from their very infancy. And therefore, I think by the time they come to a stage when they're ready to go public, we already had a relationship for 5, 6 years, right? In terms of giving them funding, in terms of helping them with risk management. A number of them actually have global operations already, where again, it fits in very well with Citi's Globality. And so I think having a dedicated unit which understands the specifics of these companies' needs because they're different has been actually a very good strategy for us.
Do you see banks like yours become incubators of new tech firms? 30 years ago, you incubated a company known as iFlex, which now resides within Oracle. Do you think that the time has come in again where you could be incubating your own technology or somebody else's technology and then scale it up like Visa was for Bank of America before it was spun off?
Yeah, so I think at a global level, because that strategy has to be driven globally, right? So we do have funds and dedicated, we look out for investments, right? Which could be viable investments for Citi, both from an equity perspective, and I think adjunccies, things which actually help our business for our clients in terms of product solutions, right? So that's something which is ongoing, Raghu. Whether it's going to be, I don't know whether the model will be, as you mentioned, the old, Sizzle or Puzzle or all the other operations we had, but we absolutely have a team globally which looks out for fintech and other tech investments, which makes sense for us.
It's been nice having you on our show.
No, thank you for having us, Raghu.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.